notwithstanding, but still a spike. Let's join Chris Weston from IG Markets in Melbourne. Chris, welcome to you. Just sort of as a snapshot of sentiment, really. What do you make of that now 10.5% lift off to 37 cents, acknowledging where those shares had been and the offer price all alongside?
Well, I think the deal's expected to complete mid-December, around that sort of time. So there's still I mean, this is part of the problem with the bid that we saw prior to it, and it was always trading at a massive discount. One, because people were saying it was just so long till we actually get the deal completed that so much can go wrong, and hence why the stock traded such a huge discount to the previous bid. The fact is now that we've still got a few months until the actual deal is expected to be completed. Is the stock still trading at a sizable discount, about 7 or 8 cents from the bid price there? So, yeah, I think people are probably saying here that things can go wrong. I did see that on the headlines that they have opened it up to other parties if they so desire. So clearly the market's speculating that's not going to happen straight away, at least. But I think people are just the sizable discount to where the offer is saying to me that the market's still talking about potential headwinds for this deal to go ahead.
Chris, James Wilson, seeding money analyst at RBS Morgan's, quoted by Reuters as saying, look, buyers call the terms right now. Fair assessment? Yeah,
I think that's probably the case at the moment, especially at these suppressed prices. I mean, if you are a Chinese company, I mean, I still think price is true, and the shareholders will always be accountable. They will want a decent price for this. But yeah, I think this is you've got a market now where a lot of the sort of mid-cap stocks are finding it quite difficult to get funding. You know, some of the small ones have had some substantial rise and they're going to the equity markets. But yeah, I think if you're cashed up in this market, if you're a decent sized company with cash to hold, yeah, you probably can get some decent bargains right now. I'd say it is definitely a buyer's market. All right,
let's talk about the bigger picture that we find ourselves in. We've got Jackson Hole dateline September the 1st there. Is it going to be a jaw-boning get-together, shindig, hoe down, all the rest of it, Chris, or will something tangible emerge? What's your call?
Well, I do believe that we're going to see the dollar on a bit of a back foot this week. We've already seen gold spike up a little bit this week, and I think Ben Bernanke's letter to the Republicans on Friday has really got the market really quite interested about this Jackson Hole meeting. It's clear that the Republicans want him out as quickly as they can possibly get him out, and I think Mitt Romney's already said that he won't renew his term. So he defended himself, saying that something on the monetary side will happen. The market is primed to hear exactly what he means by that, and I think that the market's got very excited that Jackson Hole will be this springboard, this symposium to lay down all these different avenues that he has in terms of laying out the transmission, the mechanisms of easing that he has at his disposal. I think they could get very disappointed if they actually think that we're going to hear an announcement of policy change at this symposium. That's not going to happen in my mind. So you know, there are people who are actually saying we're actually going to get that full clarification. May be a little bit disappointed. But I think what you've got to look at right now is exactly what he meant by the FOMC minutes the other day. Now, the FOMC minutes were clearly a lot more dovish than the market had been anticipated for. Yeah, they're talking about more accommodative policy being needed, and that's the key policy here is if we don't see a substantial and sustained growth. Now, some of the data has been better than expected of late, but I think you've got Ben Bernanke and the Fed will be asking themselves in the Q3 we're likely to see about a 2.3, 2.4% print. Maybe a bit of payback coming into Q4, but is that substantial? Is that sustainable? And I think that's the question that the market needs to ask themselves. If they don't, then clearly I think we're probably going to get more asset purchases sooner rather than later. I personally think they're going to be looking at what the Bank of England have done recently in terms of the funding for lending and potentially going down that route, incentivising banks for lending for effectively what could be zero rates for the banks. But I think at the moment, yeah, I think it's going to. This is the event risk of the week. It's clearly we want to hear what he's going to be saying. I think he comes out at midnight on Saturday morning for us. I think that's about 10 o'clock Eastern time in the US. So I think the market's getting very excited that we are going to hear him lay down the policy tools that he has at his disposal, and one of those will clearly be further asset purchases, both on the mortgage-backed and Treasuries buying side.
What do you make of, without sort of getting bogged down on it, just James Bullard? We know he doesn't vote, but it is noteworthy that he did call for a second round of asset purchases back in 2010. He was the first Fed official to do that. So at the time he was behind it then. Now he says those minutes that you flagged, Chris, are dated, they are redundant, things have changed materially in the month since. So bin those minutes, the Fed will have less inclination going into Jackson Hole to do anything other than jawbone.
Well, I mean, yeah, that's right. I mean, the minutes were a little bit stale. I mean, what they don't include the retail sales numbers, which are up 0.8%. Some of the housing metrics, the housing market index was up at, I think, the highest levels in 2007. Obviously, it didn't include that non-farm payrolls, which came out 160,000 odd. But I still think at the same time, whilst we've seen that slightly better than expected data, that line, substantial and sustainable, is clearly the line that Ben Bernanke's using as the main operative there. So I think his comments were interesting. You've got Charles Evans as well, has recently been out. He's very, very dovish. Everyone knows that. He's been looking for unemployment to try and get down to 7%. He wants to see more aggressive monetary stimulus. Again, he's a non-member coming through as well.
Yet Bullard has moved the 2-year Treasury yield more than any other FOMC official in speeches and interviews he's given. So he is the most dynamic market mover of all those officials. Yes or no?
Well, I think yeah, I mean, if you're going on those premises in terms of what he's moved, then yeah, I think that's the case. And again, your point is probably the most valid, and that is we want to hear a Fed member change their tune. If they've gone from one, hawkish stance to a dovish stance, or a dovish stance to a hawkish stance, that's what's of interest to us, rather than someone like Charles Evans, who has maintained a very ultra dovish stance for the last year and a half or so. I think what's interesting with Charles Evans, though, is he is giving some very insightful commentary. He wants to see core PCE. He's saying that the Fed should be targeting that 7% level, and that's why he wants to be coming out and doing these side of things. We've seen a number of Mr. Lockhart as well. I think he's another member of he's actually a voting member recently, coming out and saying that let's be careful about too aggressive monetary policy. But the minutes have got everyone very, very excited that something's going to happen. A lot of the investment banks who are saying it's not going to happen, we're not going to see easing, have gone to a 50-50 mandate now. They're saying there's a very good chance it could come through. I think Ben Bernanke now, I think what's the other thing, Carson, is the cynics out there, from commentators in the US. I've heard some pretty outrageous stuff. Some people saying that because Mitt Romney doesn't want him in power, and he's not going to give him another term when his term finishes in, I think it's February 2014 or January 2014, that he could come out and change monetary policy just purely on the principle to try and get Obama back into power, so Obama gives him another term in office. So there are some pretty outrageous calls out there. But I think what's also interesting here is while we might see just the foundations being laid. What we do have before September 12th is we've got core PCE coming through this Thursday. Now that's obviously their preferred measure of inflation. You've got 2 more jobless claims coming out. You've got an ISM coming out on the 5th of next month, and of course on the 7th you've got the non-farm payrolls. So it could really, I think that non-farm payrolls could be a deciding factor, and I think that data will have such a more significance in terms of how the dollar trades, gold trades, and of course equities trade.
Yeah. It's noteworthy, just back on Evans, as you say, he's been persistently in one camp. He says, I don't need to see any more of that data. I mean, to know that we need more accommodation. It can hit me left, right and centre. I'm of the view and I'm not changing my tune, so make of that what you will. More broadly here...
I think, Carson, at the end of the day, I mean, we've been talking about QE3 for months and months and months. Hopefully, we are going to get now to a point where we're actually going to get it or we don't. And, it'd just be nice just to get that clarity, and it'd just be nice to stop talking about it and actually just move on, to be honest.
Before we put that to bed, the chances of us getting clarity out of 10 would be what from September 1?
At Jackson Hole, 50-50, 5 out of 10. It really is just going to be. He's going to lay down the transmission mechanisms. He'll outweigh the costs against the costs of doing it against not doing it, and I think he'll. I mean, I didn't expect too much from the minutes, and we got quite a lot, so I could be very wrong here.
That sounds like a yawn sell-off trigger, if ever there was one that you were looking for. All right, and then, as you say, there could be that conspiracy element alongside as well. Bring it all home, Chris, this week. So there's that event risk. You've got Chinese PMI Saturday, so we'll kind of miss the rush of that one until next Monday. But what else in the meantime, aside from the predictable outlooks and guidance from reporting season?
Well, the reporting season's going okay. I mean, if you just look at how everything's going, there's more companies beating than missing, and we've had now 2013 EPS being revised down to about 9.5 from 10.8 pre-market. So, I think that will continue to be looked at. But we've had 77%, or even probably more than now today, about 82% of market cap out the way. So, I think it's a macro week. It's going to be the melt-up, perhaps going into Jackson Hole, that I think that I suggested will happen. Whether or not we see people fade that on Monday is going to be another situation. Italy are going to come out with bill and further down the week bond auctions as well. So I think we're going to be looking at that pretty closely. And again, any kind of rhetoric about what's going on in Europe as well, I think it's going to be the clear thing. What I wasn't, again, particularly happy about was the ECB now coming out and saying that they want to wait till September the 12th, once the Germans vote on the ESM, to actually get the idea and then come out, and then once they've actually got that through the system, and then they will relay the conditions that they want to put on Spain if they ask for assistance. Now that means we're not actually going to get the conditions available until October the 4th, which again just pushes that clarity mechanism that we're so desperate to see, and what we've been trading around for some time now. So Australia, there's not a huge amount. Next week's the big week. It's super weak in terms of data. We've got employment, RBA, and GDP all in that 1 week. So I think locally it's really about reacting to earnings season, and also these macro headlines about what happens with Greece, what happens with Spain, and obviously what happens at Jackson Hole.
Weston's wisdom, I'm calling this slot. You have a good one. Thanks for enlightening us.
Cheers.
All right.